Hi, welcome back once again to Cbse Board Economics. I'm Saddam Hussain here. Today, we will be discussing another very important topic in national income accounting under macroeconomics. That is, what is factor cost and what is market price. We write it in abbreviation form FC and MP. Here we'll be discussing few questions. What is factor cost, FC? What is market price, MP? Can factor cost be equal to market price? Can market price be greater than factor cost? Can factor cost be greater than market price? And of course, how factor cost and market price help in doing national income accounting numericals. Let's begin. The first one you have, what is factor cost? We've already seen in earlier videos or topics or chapters. There are four factors of production. One is land, one is labor, one is capital, and the last one is enterprise or entrepreneurship. Land, labor, capital, and entrepreneurship. We already discussed without these four factors of production, we just can't do any production. They are very vital, they are very important in production process. Land, labor, capital, entrepreneurship. These are the four factors of production. And of course, when we make use of these four factors of production, we have to pay them factor payments. We discussed already. We have to pay rent to land, wages and salaries to labor, interest to the capital, and profits to the entrepreneurship. We call them as factor payments or factor receipts or factor incomes. When the firm or the producer pays to them, we call them as factor payments. The producer or the firm has to pay rent to land, the firm has to pay wages and salaries to labor, the firm has to pay interest to the capital, and of course the entrepreneur gets profits. Now we come to what is factor cost? Simple. Now you know the cost incurred on these four factors of production is called factor cost. The cost incurred on the four factors of production is called factor cost. To put it in simple terms, the sum total of the factor incomes or factor payments or factor receipts is called factor cost. We can call it as what's factor cost? Factor cost is equal to rent plus wages and salaries, or we call them as compensation of employees, COE, interest and profits. So factor cost FC is equal to, in a formula, rent plus interest plus wages and salaries plus profits, or wages and salaries plus rent plus interest plus profits, factor cost. I hope it's clear. What's factor cost? Is the cost incurred on the four factors of production. Now we go to next one. What is market price? Market price is nothing but the price of the commodity in the market. When the commodity goes into the market, the government imposes indirect taxes on it. At the same time, the government provides subsidies to the firms. So market price is nothing but factor cost plus net indirect taxes, NIT, which we discussed earlier. NIT is nothing but net indirect tax. It's the difference between indirect taxes and subsidies. NIT is equal to IT minus subsidies. So if you add NIT to factor cost, we get market price of the commodity. So market price is equal to factor cost plus NIT. I repeat again, factor cost is the cost incurred on the 4 factors of production: land, labor, capital, entrepreneurship. That's nothing but wages and salaries plus rent plus interest plus profits, or COE plus rent plus interest plus profits. What is market price? Market price is the price of the commodity. We can get market price by adding NIT to the factor cost of the commodity. Market price is equal to factor cost plus NIT, net indirect taxes. Of course, wait for some time. I will be giving you some numerical examples. Now, the third question you have, can factor cost be equal to market price? Yes. Factor cost can be equal to market price when NIT, net indirect taxes, are 0. NIT is equal to indirect taxes minus subsidies. Suppose indirect taxes are 10% and subsidies are 10%, NIT will be 0. So factor cost will become equal to market price. Can factor cost be equal to market price? Of course, it can be when NIT is 0. Can market price be greater than factor cost? Yes, market price can be greater than factor cost when NIT is positive. NIT is positive means, we discussed already, again I repeat, NIT is equal to indirect taxes minus subsidies. When indirect taxes are more than subsidies, NIT is positive. So you are adding to the factor cost NIT, positive NIT. So market price will be greater than factor cost. Can factor cost be greater than market price? Yes, of course. It all depends upon NIT. If NIT is negative, factor cost will be greater than market price. That means subsidies are greater than indirect taxes. In this case, factor cost will be greater than market price. It all depends upon NIT. If NIT is 0, factor cost becomes equal to market price. If NIT is positive, market price will be greater than factor cost. If NIT is negative, factor cost will be greater than market price. So we do the revision of these before I give you some simple numerical examples. We are discussing what is factor cost and what is market price. What is factor cost? Again I repeat, the factor cost is nothing but the cost incurred on the 4 factors of production. That's land, labor, capital and entrepreneurship. Suppose if you are paying to land 10 rupees, labor 10 rupees, capital 10 rupees and entrepreneur gets 10 rupees, the factor cost is 40 rupees. That is, factor cost is equal to wages and salaries plus rent plus interest plus profits. That's a factor cost. What is market price? Market price is the price of the commodity. If you add NIT to factor cost, we get market price of the commodity. So market price is equal to factor cost plus NIT. Can market price is equal to factor cost? Yes, factor cost can be equal to market price, or market price can be equal to factor cost when NIT is 0. Can market price is greater than factor cost? Yes, it can be when NIT is positive. Can factor cost be greater than market price when NIT is negative? But most of the time market price is greater than factor cost because the government imposes more taxes than the government provides subsidies. Only in case of certain commodities, maybe in case of agricultural product, the government is providing huge subsidies to the farmers. In their case, factor cost will be greater than market price because there are not many indirect taxes in case of farmers. So only this can happen. Now I will explain you these things with the help of numerical examples. So mind it, follow these simple numericals. It will help you to do measurement of national income by income, product and expenditure method. So these are the basic rudimentary concepts, basic concepts. They will help you to do measurement of national income. Please follow these. So let's see. So we follow this. So we find out, right, one second, excuse me. So in this case, okay, quickly I'll go over this numerical examples. We'll see it here. So you have the first one is factor cost. I given you the formula. Factor cost is equal to rent, very simple, rent plus interest rent plus interest plus profits plus we can call it as wages and salaries. So this we can call it as compensation of employees. We'll discuss it later in detail. Compensation of employees. This is factor cost. Factor cost is equal to rent plus interest plus profits plus wages and salaries are compensation of employees. That is the 4 factor incomes. Wages and salaries plus rent plus interest plus profits. So market price is equal to factor cost plus net indirect taxes. NIT we already discussed it. NIT is equal to indirect taxes minus your subsidies. Okay, now suppose if the factor cost, we'll take a numerical example. Factor cost, I'll write it here, rent plus interest plus profits plus wages and salaries. Okay, suppose we take it rent as 10, simple example, rent interest as 10, profits as rupees 10, wages and salaries as rupees 10. So the factor cost of the commodity will be rupees 40, factor cost. And what is market price? Please follow. Market price is equal to factor cost plus NIT, net indirect taxes. Suppose in this case, if NIT is, so NIT is IT minus you have subsidies. Suppose in this case factor cost is rupees 40 plus NIT is IT. Suppose the government has given you 20 rupees indirect taxes and rupees 10 as subsidies. So obviously this will become 10. So the market price of the commodity will be rupees 40 plus 10, 50 rupees. That is a market price. So this is, in this case, can factor cost be equal to market price? Yes, when NIT is 0. So in this case, factor cost will be equal to market price. When NIT is 0, in this case, NIT is 0, can market price be greater than factor cost? When NIT is positive. When NIT is positive, in this case, can factor cost be greater than market price? When NIT is equal to, this is negative here. I hope it's clear. This is all. So we'll do the revision part of it once again. So this is the topic we discussed today, factor cost and market price. I repeat once again. What is factor cost? Factor cost is the cost incurred by the firm on the 4 factors of production: land, labor, capital, and entrepreneurship. We have to pay rent to land, wages and salaries to labor, interest to the capital, and profits to the entrepreneur. So factor cost is equal to rent plus interest plus profits plus wages and salaries. What is market price? Market price is the price of the commodity in the market. Market price is equal to factor cost plus NIT. So the third question you have, can factor cost be equal to market price? Yes, when NIT is 0. Can market price be greater than factor cost? Yes, when NIT is positive. Can factor cost be greater than market price? Yes, when NIT is negative. It all depends upon NIT. Please go through this properly. So that's all we have time for today. Till we meet next time, it's a goodbye from my side. I'm Saddam Hussain here once again. I wish you all the best for your board exam. Please don't forget to subscribe, like, share, and comment. That's all we have time. Goodbye. Best of luck for your board exams. Take care.